This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe. Going to give you an update on the stock market. What I want to do today is I'm going to add in an extra indicator, an overlay, I should say, on all the time frames. Every now and again, I think it's good to just sit back and look at what the price structure is in each time frame. There's a couple key points that I want to bring up about this that I think will help you in terms of understanding how we use multiple time frames together. So let's go ahead and get into this. I'm going to start with the monthly chart, and I think, when you look at the ZigZag that I've overlaid on here, and just so you're aware, I use the double ZigZag with high-low, and I have it set. I'm only using period 2. I'm only using the one of the zigzags. I guess you can do 2 different time frames, but I'm using the 5 level on there, and it does a really good job of representing the highs and lows that I think are important in each time frame. So I have that set up in all the time frames the same way. It's the same indicator, and it's set to 5 for each one, and it finds the important reversals that I'm looking for in each time frame. So when we look at it this way, you can kind of see that the only thing that's taken place on the monthly chart is we had this undercut take place here. We went from a new high to a new low back in 2020 and then immediately reversed. We never had a reversal of the trend. We never had a rollover in the moving average. Okay, and so we just made a simple lower low. You can go back to 2015 to 2016. You see how we just made a simple lower low. What we've done in this time frame, since the beginning of the year, we don't even have a lower low. We've just made one decline. Okay, I mean, I think it's kind of relevant to look at things this way sometimes. We still have a rising 18-month line, although it is losing a little bit of slope. But we've seen in the past where this has happened, and if the market can recover quick enough, then no harm, no foul, basically. I'm kind of the opinion that that will not be the case, that we are going to have some more of a complicated pattern develop. It's not just going to turn and go back up. I think there's too much damage done to a lot of the charts. This MACD is much more pronounced to the downside. There's separation between the MACD and its signal line. It should provide resistance on any more of a move to the upside as we get closer to the 18-month line. So when I look at it this way, I can see that the trend is up on this time frame. I mean, we made a new high, we made a higher high, and all we've done is pull back. We don't even have a lower low. We haven't done anything like that. We haven't even reached the 50% retracement. Remember, we did this before. 50% retracement would be around 3,500, or on this indicator is around 350. Okay, we haven't even reached that. Now, we kind of penetrated the 38% retracement, but never really broke it to any significant degree. So I'm just trying to look at each time frame unbiased, and I think that's how you want to go about doing this. The last peak was confirmed by ADX and MACD. The problem we've got is the overrun of the 18-month line and the fact that the MACD is showing a lot of a pretty heavy reversal to the downside from an extended level. Both of those taking place suggests to me that moving straight up isn't really a high probability. Going back to new highs right away, I think, is a very, very low probability. And I say it that way because anything's possible. I just try and go with the high probability event. If we switch to a weekly chart, look at the difference in this one. So we had a new high here, which was not confirmed by MACD, and we had already shown the ADX was really low going into this peak. So all the way in here, we were looking at this being pretty suspect based on what MACD was doing, but certainly what ADX was doing. Basically, all this the fourth quarter was somewhat suspect. And then we start the year and we make a lower low. It's the first lower low. We made a bottom in 2020, higher bottom, higher bottom, higher bottom, higher bottom, and then this was a higher bottom, and then we made a lower bottom right there. Okay, so that's the first lower high. First lower low, and then we made a lower high and another lower. We made a lower high, and then we made another lower low. So we have now made 2 lower lows followed by, and in between there, a lower high. So the trend is confirmed to the downside when you've done that. When you go from a new high to a new low, and then you have a lower high and then another lower high, lower low, you are in a confirmed bear trend. That's also confirmed by what's taking place in the moving average complex. Notice how we turned positive here. The 18 crossed above the 40 here and stayed above, just like the higher lows did, the price structure. And then right as this was turning down, the moving averages crossed over at the same time. So that's when you know you have two different schools of thought. The moving averages, the 18 and the 40 moving averages, giving you the exact same feedback that we're seeing in the price structure. So we know there's a decent amount of damage done on this price time frame. And it's probably going to take a little bit of work. But that doesn't mean we can't push higher right now and move into this resistance area, which I think is what we want to do. Now, the bigger question for me as I switch back is, are we going to go test the 18-month right now? Or are we going to fail here, come back down, make a little bit more of a complex low, and then turn up? It seems like based on the last couple days' action that we're starting to see some signs of better price action. Okay, there's a couple other key things that are taking place. Number one, last week I mentioned how there is improvement in the DIs. Remember, this is always going to be kind of like the first thing that's going to happen. Every now and again, you'll have a momentum divergence in place that would be first. But in this case, when we have confirmation to the downside, the DIs are usually going to be the first thing that start to show contraction phase developing, which is what's developing. Now look at what happened here. And we have one more day left in the week. So we don't know for sure if this is a crossover, but right now it is crossed over the signal line and we're pretty far away from the zero line. So that increases odds that we could continue to push higher. But it doesn't mean we can't pull back first before we do that. It could go either way. We could push up a little bit more and then pull back and maybe pinch, have a little pinch here while this is cupping around. But I think based on what I'm seeing, the odds are increasing that we're going to finally go and test that 18-month line. And if that 18-month line is still rising, that's probably a pretty good thing. If it's rolled over, then we have to keep a really close watch on how things go. Now, if we go to the daily chart, I think there's a couple key things. What I have been talking about was the undercut and rally pattern and coming back up through this basically 390 or 3,900 in the S&P. It was a spike and ledge formation, and we spiked underneath and we formed a ledge, and then when we took out the high of that ledge, that was sort of the sign that things want to work higher for now. The kind of neat thing about what took place here is after it broke out, it came back and checked back to the breakout area in the form of a pinch as it's crossing the zero line. Right? So we had sort of like a second entry there. And we know the target is back up into this resistance zone. Now this acted as support. So if we look back, here's support and then resistance. So we know right in this 418.5, 419.5, 420, 421, somewhere in that zone is really where resistance is going to come in again. But based on the way things are taking place here, we had green DI crossover and hold the 25 line and turn back up. Okay, so we've now made a second higher high. So this time frame is to the upside right now. We were in a downtrend. The only interference we had there was this higher high right here. This was a quick one, and then it immediately failed and turned back to a new low. Other than that, it had been lower highs. This was a lower high. This was a lower high. And then we finally took that out. And now we want to start watching the lows. Okay. And the fact of the matter is, because we've turned the trend back to the upside in a more confirming manner on the daily chart, okay, we now need more evidence than just a drop. We're going to need a little bit more price structure reversal to get this to turn back down to the downside. So I think this is kind of relevant because now I know we could just come down through and that could be a signal based on the moving averages, but I think what I would be looking for is a lower high, something along those lines, to be have a little bit more confirmation. And the reason is because we've made a second higher high. And when we see that, we know this time frame's trend has turned positive. And we do know that we're getting overrun in MACD on the daily chart. So that would tell me I'd probably want a little bit more confirmation before getting overly bearish back to the downside. So we've got that in place. Now, the one other thing I wanted to mention here is on the pullback, which was the pinch play. You see this little 2-bar pinch that came back to the rising 18? So this was a test of the 18 after the trend turned back up and got through this key level. We came back and tested that area and tested the 18 and really successfully tested the 18 with a swing low, okay? Now, that swing low corresponds to this pullback here. That's here. That's what this is. Okay, this is an ABC pullback. So let's zero in on this so you really understand what I'm talking about. We've moved the trend to the upside because we made higher highs and higher lows. We're moving up, and then we make a lower high and a lower low. That is not a trend reversal. Remember, that is just an alert that the trend has turned down. And that also coincides with this failure setup where we have a move where the 18 crosses down below the 40 and price is below both. And we're looking for a move back above the moving averages to kind of trigger us back to the upside. Well, when we have this move like this, you can use this last swing low or swing high as kind of like an operative buy signal again. Linda Raschke refers to this as a power buy, where you do an ABC down, and then when you take out the B, you call that a new buy signal. What we know by looking at all the things that we talk about on a weekly basis is that we had a zero line reversal with low ADX. Okay, now also look at this higher high. See how we were making higher highs here? Look at how the ADX confirmed here, but on this peak, it did not confirm. You see how that made a lower high? Now, we had MACD divergence, but this is more important when we don't get above the 25 line on ADX. That tells me we're going to go through a reversal. Well, it was just an ABC reversal, and that set up a new buys chance. Now, the reason why this isn't a great buy is because on the daily chart, there's no really good momentum. I mean, this is not a powerful pattern where we're pulling back. So it was just a little pinch play set up and with a trigger using the hourly. Do you see how that's more of like a trading play back to these prior highs? You just need to understand if you don't have momentum in place on the higher time frame, then you have to treat it as a trading play. And that's all that's really taking place right now. There are signs of improvement. The volume's gotten a little bit better. We have signs of improvement based on the MACD crossing over the signal line stretched away from the zero line and the fact that these two lines are coming together in a contraction phase. But it's still counter trend on the weekly. Still have to have your antenna up. I don't think this is going to be a straight up affair. We had a couple really nice days here, but expect this to still be a little rocky, especially once we get into this next resistance zone. All right, that's the update for the week. Go ahead and post any questions or comments. Thanks.